Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Tom Lee breaks down the Trump-Elon feud, Tesla's key strengths, and why market dips stay shallow. Stay tuned for more.
I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute, because it exposes our custodians, our counterparties, and our employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks. What's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other prefers were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due.
Bitcoin and Ethereum may lead the crypto market in fame and market cap, but when it comes to global payments, they fall short. A recent tweet by crypto researcher SNKK sparked discussion around a growing consensus BTC and Ethereum simply weren't built for high-volume, fast-moving financial systems. Their speed, scalability, and energy demands don't align with what global banks and institutions need. Bitcoin and Ethereum process fewer than 20 transactions per second. That might have worked in crypto's early days, but today's financial systems require the ability to handle hundreds of thousands of transactions per second instantly, securely, and at minimal cost. Even newer systems in testing are reaching 4,000 transactions per second. BTC and Ethereum just can't keep up due to their older proof-of-work structures. That's where XRP shines. With its federated Byzantine agreement consensus, The XRP ledger settles payments in just 3 to 4 seconds at a cost of under a penny. It can handle 1,500 transactions per second and was built with institutional use in mind. Major financial players like Standard Chartered and Bank of America have taken note. While Bitcoin and Ethereum remain speculative assets, XRP is being integrated into real-world banking systems. It's fast, efficient, and regulatory-friendly, everything institutions need. That's why XRP is leading where others simply can't follow.
The last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45–50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid-60s, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe.
The U.S. federal debt is spiraling at record speed, now sitting at a staggering $34 trillion and $11 trillion jump in just 4 years. According to Weiss Ratings, interest payments alone now make up half of the entire federal deficit. This kind of debt growth isn't just alarming, it's historic. Even JPMorgan Chase CEO Jamie Dimon warned that the situation is a real problem, pointing to a looming crisis in the U.S. debt market. But amid all this financial uncertainty, crypto may be standing on the edge of a breakout moment. If the Treasury market begins to collapse under the weight of new debt issuance, the Federal Reserve might be forced to step in by printing more money. That kind of monetary response could severely devalue the dollar and send Bitcoin and altcoins soaring. Weiss crypto analysts predict that such a scenario could launch digital assets straight into the stratosphere. With inflation worries rising, Bitcoin is becoming more than just a store of value. It's being treated as a real hedge. GameStop CEO Ryan Cohen, who's already invested over $500 million in Bitcoin, sees it as digital gold with explosive upside potential. If the Fed turns on the printers again, crypto could become the financial lifeboat the world turns to. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.